Hi, I'm Steve LaFrance with Blakely Financial, and I'm summarizing the past 30 days in 3 minutes. The S&P 500 was flat during May. While the 0.2% return was a welcome sight after April's 8.8% decline, the daily price movements remained volatile, with the index down more than 5% at its lowest point. The credit market's corporate bonds produced positive total returns as Treasury yields stabilized. Energy was again the top performing sector, returning 16% as the price of oil rose 9.5%. Consumer discretionary was the worst performing sector, losing 5.1% as Amazon and Tesla both traded lower. Corporate bonds generated 1.9% total return, and the international index returned 2%, outperforming emerging markets' 0.6% return. Looking at the big picture, Federal Reserve policy and inflation remain top of mind for investors. The Fed raised rates 0.5% at May's meeting and is expected to follow up with additional 0.5% increases at both the June and July meetings. Separately, data showed inflation accelerated 8.3% year over year and remains near a 40-year high. The Fed wants to see evidence inflation pressures are easing, which leaves investors debating how far and fast the central bank will increase rates to combat the situation. The near-term investment outlook remains particularly uncertain as the market searches for direction. Walmart and Target both reported underwhelming Q1 earnings. They were caught flat-footed by not raising prices fast enough in response to increased supply chain costs. The two retailers also saw inventories grow by 30%, reflecting price increases by their vendors, but also softening demand for discretionary purchases such as home goods and apparel. Walmart CEO said, quote, "The rate of inflation in food pulled more dollars away from general merchandise than we expected," end quote. Looking ahead, the two retailers signaled the potential for additional price increases. Target CEO said, quote, "You should expect us to surgically pass along costs where appropriate," end quote. The earnings reports caused retail stocks to sell off and highlighted three key themes. First, inflation pressures are strong and catching companies off guard. Walmart revised its forecasted earnings lower, while Target did not provide an update. Second, inventories ballooned after the retailers restocked at higher prices and consumers shifted their spending priorities. It could take multiple quarters to work through the excess inventories. Third, additional price increases may be coming as companies focus on maintaining profit margins. The three themes demonstrate inflation's worrying impact, which we will continue to monitor. Despite these risks, economic fundamentals in the U.S. remain positive, and the most likely path forward is continued recovery and growth. The strong job market and sustained healthy levels of consumer and business spending are expected to serve as tailwinds for overall economic growth as we head into summer, though we may see some modest setbacks along the way. Ultimately, fundamentals drive long-term performance. While we may see bouts of uncertainty and potential periods with market sell-offs, a well-diversified portfolio matching your goals with timelines remains your best path forward. Again, thank you for your trust and confidence.